Have you ever wondered how the banks can generate winning trades with such accuracy, and why your trades just end up being break-even trades or even worse, losing trades? Well, in this video, I'm going to share with you exactly how they do it. And even better, I'm going to demonstrate this on a live 1-minute chart on the EURUSD pair. So let's head straight over to those charts. Let's go to a 1-minute time frame. We're on live price right now. You can see we're currently live in the market. And the first thing we do is we look for the trading range we're in. Well, currently the market has a trading range from this swing high to this low, but we need to look at the bigger trading range. This is the first step we need to do before we do anything else. So our bigger trading range currently is from this swing low to this current swing high. Now, the next thing I need to do is to look at within this trading range where price has been removing previous swing lows. Now, I'm talking about swing lows like these lows here in the market. These are my previous swing lows which have been removed. And then I'm looking for an area of imbalance. Now, if you're not sure how to look for the imbalance zone, do not worry, because the next video will explain all of that. And there's plenty more on the channel to teach you about imbalance trading. Now, the first thing I want to find is the origin of the move. And that's something you'll learn again in that next video coming up. Now, the origin is going to be this level right here. It's my last area of imbalance, which left this area of demand in the market, and we had a nice rally to the upside. Now, if we go through this chart on a 1-minute time frame, forget about current price. We're now tracking to see where price is going to go next. We have another origin level here from this swing low. You can see the market came back, it filled that level, so it's been filled. This area of imbalance left over here was filled, and in fact, what we see here is a manipulation. Take this swing low here, and the market continues up. Now, that's when we're in a buy mode here inside this trading range. Now, it's something that you need to start studying and understand much more clearly. Now, everything that you see in this video is exactly what I teach to my students inside the mastermind community and through the masterclass course. So if you want to pick up on that, there is a link in the description to find out more. But once we identify this area has been removed or been filled, we don't need it, we look for our next origin. This is our next origin. This level here, leftover imbalance from this swing low, the market continued up. We create this swing low, we look for the next origin area. This is our next origin right here in the market. You can see we have a swing low, an area of imbalance left over, and we broke structure to the upside. Now, at this point, we can mark off this swing high. We need to see a breakout of this high. Okay, you can see the market actually came back, filled this imbalance. And look at this, another manipulation through this swing low, reversal, the market goes back up. Now we're inside a different trading range at that point, and it's understanding that this area got filled. So we look for the next area. This is our next area. And that's when we see the market breaking through. This became an origin. We also then have a new origin left over here. And you may say, what about this origin here? But we never broke to the upside, so I'm not going to include it. We continue to go up, we make another swing low and a new origin level here. Okay, and we continue up and we do the same thing as we see the market continue to go higher. Now, that's where we can see the market coming to. We can see we broke through here. We filled this imbalance as well. And this one, so we can remove those two areas. And since we can see the market has now continued to drop, so we've closed through this origin, removed it. We closed through this origin and removed it. And we've closed through this origin. So it tells me that the market at the moment will want to go to fill this area. At some point, it's going to come all the way down here to fill that area. Now, we could see a bounce off here and another reversal back to the upside. This area of demand could very well hold. And that's where you understand then coming into the third step of the next video you're going to watch when we're looking for those reversals. But what we can also look for here is this area to be removed. A removal of this low, and then we can see reversal. We can then start capturing a reversal back to the upside. Now, if we do close through this low, we have to look further back in time for any areas. And as you can see, a long time back in time here, we don't have anything at the moment. So currently, my trading range is still within this swing low to this high. Now, if we're looking for any sell trades on the way down, what we can do here is we can look for those areas to pull back to areas of imbalance. So when we see this area of imbalance, we can identify the market came back in, okay, and then fell to downside and broke structure once again. So we broke this structure, We continue to fall. Now, as the market does this, we create areas of origins of imbalance again, just like we saw previously. Now, let's just move this out of the way. We have another area here, this level, that got just about filled, I believe. Let's have a look. So remember, this is live market conditions. Okay, we didn't fill it, so that's an origin. Then we continue to fall down. The market then pulls back into this area of imbalance. This is an area of imbalance left over. We pull back in here and we continue to fall, making a new swing high, leaving a new origins. Every time we see this, these are areas we're going to see the market want to reverse back to. So we just remove these levels at the moment. We now have areas to the upside. So our current trading range, if we see a reversal here, these are areas for the market to go to. We have another swing high here formed. Again, where does that swing high come off? Well, this is a manipulation of this high here. Just manipulates it, I believe. Let's have a look at the high. We have a 9787 and we have a high of 98. So in fact, looking at that, they are, let's check out again, they are equal heights. So what that actually leaves here for me is an area of liquidity. Now what that means, and it's something else completely different right now, but it means the market is going to want to take this liquidity and to fill an area of imbalance. We have a leftover imbalance sitting above there, and we have another area of imbalance here and here. So the market may want to go up to take this liquidity at some point. We then create this high. We don't break structure at that point, what we do with the wick, but this area got filled at this pullback. So this was an origin here. And the market took this low, we pulled back, we create this swing high, manipulated through, reversed, and continued to fall. Now we have this as a new origin. And then we have this as a new origin if the market can take this low. So this is how we can track price. Now we have our levels on the chart. We know where we're going to go to, this low eventually. But what about capturing a trade now? Well, this is where the third step in the next video is going to help you to understand this. We're looking for the market to come back to a good location for a reversal. Now, if I'm looking for an entry here, I need to see the market pulling back into this area of imbalance. So I could see the market come back, take this swing high, manipulate through, fill this imbalance, look for reversal back down to this level. That's what I'll be looking for. As we can witness right now, we had an area of imbalance left over here. And this area of imbalance has just been closed through. This now tells me for absolute certainty, as long as we don't see it close back down from this level, we're going to take this high. And watch what the market does. We take the high. That is how you can read price. Now, if it closes through this level as well, this tells me we will take this high here. But for now, I want to see the market hold at this area of imbalance. Do not close through this level. Show me a reversal back down so we can target this level. And that's how we're going to read price. So we have the 3 steps in this area. The first step was we marked out our charts, understanding where we are inside that trading range. The second step, we then marked out these areas of where we've got liquidity, where we've got previous areas of origin of the move. Now, what this is an area of supply. Area of supply. We have an area of liquidity, which tells me the market at some point will want to take that liquidity and go into an area of supply. We have an area of supply. And again, here, there is a small swing point here, but it's more of a sideways price action where this whole zone is an area of supply. And we have an origin here as well. I've just marked this one. It's a much easier one to see in the chart with this swing high and the drop to downside. But back to current price is what we're reading right now. We're waiting to see, okay, this is what I want to see, is the market to hold below this level to give me a reversal back down through this level. If we can close back down below this level, okay, and fill through this imbalance and this imbalance, then we'll continue down to this level. Now, if the market closes through here, then I'm going to see the market want to take this high. And then we're in a potential reversal back up to find an area of liquidity to be able to sell back down. Now, long term, we're still selling to this level here. That's the important part to remember. Yes, we could see the market come all the way back up to this area and then drop back down. But I'm not expecting that to happen. I'm expecting its price to reverse here to go for this level. We want to see it close down. Now, right now, I need to see a close through ready this level. Now, if we close up, we're going up. Okay, so we close now, we're going to take this high for sure. Let's wait and see what happens. We've got what? We've got now 20 seconds left on this candle. Now this will be an area we could see a complete reversal still. That's why we always wait for the candle to close. Never take a trade on an open candle. Wait for it to close to show you where the market wants to go. Okay, so we've closed this level. It tells them we're going to definitely now 100% take this high. It's got to take that high to find liquidity. Okay, that's what we're looking for. So now we have this as an area for a reversal. The market's going up. We've got a strong reversal. This is our last trading range. So look at it like this. We have a trading range currently from this swing high to this low. The market's gone back up, closed through this imbalance, took this high. We've now closed through this imbalance. We want to see it take this high. Now, if the market can wick through this high, showing me a manipulation, then a reversal back down, we can sell back to this level. That's how we're going to look at the market. Now, it's not 100% foolproof. You're not always going to win every time. But if you are on the right side of the market, knowing ahead of time, being able to track price, that is how you're going to become profitable. So let's see what happens. Again, we do have liquidity sitting here. So if we do close through this area, we don't just spike it. We could see it close up and a close back down. That's acceptable to look for a reversal. But if we do close through, we've then only got ready an area here in the market. So we do have, just let me reverse that. And we do have here as well, which I actually missed. Because it's equal highs here, we do also have this origin right here. But like I said, liquidity like this is more likely to be taken with those equal highs than it would be an area. We just show you like this area here. We don't have very similar equal highs actually again. So I would say we've got an area of liquidity sitting there as well. Doing this while we're waiting for price. Above that liquidity, we have areas of imbalance, which is important. So again, we have a couple areas here to potential sell this area, this area. We then even have again a nice area of liquidity once again. This is how you can start to understand price. Above that liquidity, what do we have? We have an area of imbalance. So we have here a great area to look for a trade at any of these three areas. So if the market now could do reversal coming back to these areas, and there is no reason we couldn't see a full reversal on this trading range here. I would prefer to have seen market gone into this area of imbalance, which we have. We have gone into it. We just draw that imbalance out. This is the last area of imbalance. We have gone into that imbalance, but it hasn't really shown me yet a full reversal. I prefer to see it at least fill this imbalance and then give me a reversal showing this area of demand is holding, or to remove this low, then show me the reversal. So that's what we're looking at, and we have some great areas to target later if we see that reversal. So now we've closed through. As suggested, I said to you, if we close this level here, as we did on that blue candle, we would take this high. That has happened. So where's the next area? This is your next logical area of price to head to. So right now we're in a bullish bias because this trading range here has been removed. Now we can still see a reversal from this level. We can still see the market reverse from here and to head back down. But we're now in a bigger trading range. And let me just show you exactly the trading range we're in. This range here. So we're now within the high of this move to low of this move. Once we took this high, we don't have anything in there to fill, no imbalance levels. So this would be the logical area of the market to want to head to take out the liquidity above this high. That is how we read the markets, where the liquidity is sitting. Right now, you can see the market again. Let's go through how price has done this. We've took the range high, a nice solid close through. What is that now left behind? We can draw out an area of imbalance. So we have an imbalance level sitting there. A nice push down into that imbalance would have been nice for the market to take this high, but it's not always going to happen. If we close through this imbalance, that is showing me a potential reversal at this swing high. But the market is continuing to go bullish. We can see the market's now closing through this level. If we close through this high, this is the next area we expect price to go. But if we get a reversal of this high, we could see a full reversal back to this area. We have to wait and see what price is showing us. Right now, I'm not considering buying at the moment. I'm still considering looking for those sells. When would I consider to buy? I would want to see the market giving me a reason to buy. And at the moment, this is not showing me a reason to buy. Okay, this trading range has been removed, but it's not telling me, okay, we've done a full reversal. The full reversal would come once I see this area of liquidity taken and we see continuation. Then I'll pull back for another long, because that then puts me into a new trading range from this high to low. But I want to see right now is price holding and reversing. Now we're above this swing high. And if you look where the market is just pushed into, what is this? This is our area of imbalance. And where's the market just pushed up into? Into that imbalance. If we now see, and this is only an if until we see it, a close back down here through this level, and I want to see a removal most probably of this area of imbalance to show me the market wants to go back down, then I can start looking for pullback to sell to this area. So let's just wait and see what happens. So at the moment, we're now 10 past 10. So we've got a new candle, nearly a full minute to go. So you can see again, we've shown a close with a nice bullish candle. This is left what? An area of imbalance. Again, everything is taught in the next video coming up. This is ready just to show you in live market conditions how you can apply those 3 steps and do this on any time frame. You can do it on a daily, 4 hour, 1 hour, whatever time frame it is. The reason I've done it on a 1 minute time frame, and let me just tell you now, I do not trade the 1 minute time frame, but it can be applied just like any time frame. Now look what's happening. What do we have here? We have an area of imbalance. We are above a swing high into an area of imbalance. I want to see a reversal closing down here. Okay, I prefer to see it also moving this area of imbalance, but to me, this is an imbalance left over. This is showing me a reversal. So we've reversed. Now I want to see the market continue to drop. This is where I want to see it go all the way down to this area. It's showing me a reversal above a swing high. That's the importance. So we want to see a candle leaving an area of imbalance here, and that's where we can look for a sell. So if we can see the market holding below this level right now, this level you can see marked on the charts. Remove this area so you can see this much easier. If we can see the market, okay, holding here, leaving a new area of imbalance, which I would draw like this. This is an optimal area for the market to pull back into to look for a sell. Now you could have just taken a sell based on this reversal, because the reversals come above this swing high and we reversed an area of imbalance. So when this candle closes in 10 seconds, it will become a red candle as long as we don't fill this gap. That signals to me a reversal, and we're looking for the market to continue to fall. There you go. So now we see the red candle. Now we're looking for the market to fall. Now I'm going to explain to you where the market's going to go. We're going to expect the market to go to this level. If it closes it, which it has, we're going to expect the market to go to our next area, which is here, and take out this swing low. Once we close this area here, the next area you expect price to go to is going to be this area here. Now, understanding on a higher time frame, if this is a higher time frame, this would be your final target. This is where you're expecting price to go. But these areas, you can look to take partials. That's the way we can do it. Then we expect price to go here. And finally, this is our origin of the move. So just like I went through on the bigger trading range, what do we see here? We see a trading range from this swing low to this swing high. That's how we're looking at this. Okay, we're looking at this trading range. And we've just marked the exact same thing. Like we went through on this larger range here, we're now doing the same on this smaller range. We're applying those areas we're expecting price to want to go, and this becomes that last swing low. That's how it's easy to understand where markets will want to go. So you can see the market. Okay, so we already closed this level. We can remove that. Okay, we remove this now. We've seen the reversal. Leftover imbalance, potential area to sell from. New area of imbalance, left over again. New area. Where did the market go to? Where did it go to? To the pip and reversed. Look at that. Straight to that level, and we had a reaction. This is not just by chance. Okay, this is how you will truly succeed reading the markets. I've never done this before and really gone through and shown you how I read the markets. And to be honest, this is giving you so much golden nuggets on how to read it. You don't need to watch any other channel. You don't need to watch any other trader. This is the way for you to succeed as trading. Now, whether you're new to trading or you've been trading for some time, leave me in the comments right now if this is the best video you've ever had on teaching you how to read those markets. I want to know if it is, and if you want to see more of these sort of videos. And of course, don't forget to give me a thumbs up if you are enjoying this content today. So I'm going to look at wrapping this video up soon because it's been going on for quite some time. I just wanted to really make you understand how you can read these markets. Let's see what happens here, and let's see if we can close this level. If we close this level, okay, we know the market wants to go here next. And it's also giving us areas for the market to pull back into for more sells. Again, like I said, you could have easily taken a sell here, understanding the approach that I teach. Now, all of that, again, you can learn, inside the next video. It shows you the step-by-step strategy and how to do this. But if you want more education, you want more support, and by support, I mean within a supportive community as well, not just myself, then you will want to check out the Forex Masterclass and sign up to that today with the Discord community. So there we have it. Price closed through that level, just like I said. Next, we target this area. Okay, potentially long term, we're looking for this low here to be filled. Now, what's happening? Again, we can identify more areas of imbalance left over. Again, here, if this candle was to close where it is, another area of imbalance. So again, we have another small area of imbalance here. The market is showing me right now it's a unbalanced market. Okay, unbalanced market is showing me the momentum. A balanced market like this, okay, is showing me a retracement. Market comes down, retraces up, unbalanced market. Okay, that's how you can read this. Again, here we can see, look, unbalanced market. Sorry, a balanced market, unbalanced market. So there we go. So the market's closed this level. As I just said, we would target. Once we close that level, we target this level. It's gone straight to it. This would be our next one. Now, this is the origin of this trading range. If we close this level, we will take this swing low and go to this final target. Now, that final target, again, is to fill this area of imbalance. And that's what we're now seeing. And these are the steps to finally break through and understand how to read these markets. Don't get hooked in by those people showing you these fancy ways you're going to win with a fancy indicator, fancy method of some sort. It doesn't need to be like that. It can be very simple once you understand where the liquidity is sitting and where the market will want to go next. And don't forget the most important part I went through at the beginning of this video. And if you can't remember that, I'm not going to tell you. You can go back and watch it again, the video, so you understand it. So look at this, guys. We've just closed this level. As I said, now the market's going to take this low. This is our next area. Expect the market to go to. We've closed through. Now, it doesn't mean it's going to do it straight away. Very often you'll see it come down, create a double low, area of liquidity, and then we can see a pullback to an area of supply or a new area of imbalance. Look at how unbalanced and how the momentum in the market we're seeing right now. Now you can do this again, like I said, on any single time frame. Doesn't have to be, and we'll have another area here if the market closes like it does. We've got about 10 seconds in a moment. Let's see what happens. We'll have a new red candle if we can close within this area. And look what the market's just done. Okay, come very close to this low, creating a reversal. That is bringing in some buyers. Now we could see a reversal back up to fill these imbalances and then look for no reversal back down to this final level. But this video has gone on far too long, and I think I've shared with you in this video exactly how you can read the markets and how it can be used in your everyday trading on any time frame, not just this 1 minute time frame. And this video popping up is going to explain to you exactly how you can apply these 3-step hack I've just shown you in here, so you can go away and back test it yourself and start applying this into your trading.